Thank you, Stel. Okay,
Thanks,
Adam.
Dale.
I'm going to pass you the baton, buddy. Looking forward to hearing what you're thinking going into April. Now that we're in April and it's no longer April.
Yeah.
How you doing, buddy?
Hey, there we are. Oh, doing great. Nice to be here. Coming up. Yeah, things are good. Yeah, happy April, everyone. Looks like it's going to be a lively one.
Okay, well, you know, great to have you always, but especially at the beginning of the month, Adam, because you do a lot of great seasonal work. And before we get started, happy birthday.
Hey, yeah, feeling a bit older today. Yeah, it's my birthday. Thank you very much.
What
Yeah.
are you, like 24 now?
Still 19. Still 19. Going on a few years at that. So
Yeah.
I'm just trying.
I know you probably didn't like it when you were younger, but having a young look, the older you get, the more you'll appreciate it, man. I guarantee it. So, you know, a lot of people are talking Aussie hitting major support last week and the RBA yesterday. What are your thoughts on Aussie seasonally and technically and fundamentally with what's going on here with China and the U.S., et cetera?
Sure. Should I show a screen here?
Sure.
Let's see which one I'm showing. Got a chart up. You can see a screen on there?
Yeah, have Forex Live up there, buddy.
All right, this guy? Get some charts up.
Now we have very small screens, and now they're bigger. Okay.
All right, there's a daily on the chart there.
Okay. So there's
I'll move this out of the way.
All right. Daily?
Yeah, so it's been, I mean, for me, technically, there's that 200-day moving average it's been flirting with forever. I mean, that's kind of the story technically everywhere right now is these 200-day moving averages. Yesterday broke in stocks. And now you kind of got this trend line. I guess you're working off in the Australian dollar. I guess that's what we're talking about. I mean, to me, I'd be worried a bit more about a return back to 75. You know, there is this turn though in central banks, and you'd expect it to come to Australia and the RBA. You know what we saw yesterday, it adds to that a little bit. But you know, there isn't that much to get excited about technically. Seasonally, however, it is a good month for the Australian dollar. Really, the whole commodity complex. I can pull up some charts on that and just close Skype here. You know, let's start. Do you want to run through the seasonals, Dale?
Yeah, let's go through them. So yeah, so basically, commodity currencies. Canada's reflecting it, the weakness that we're seeing in USDCAD, and we had a nice little pop in gold is trying to threaten a breakout. But crude looks negative. So, you know, you just, whatever's on your radar, you just take us through it, buddy.
Well, I mean, to go through the seasonals, really, they add up pretty well at the moment from where we're at. I mean, the big one to start today is the Canadian dollar. So as we wrote about the Canadian dollar, there's the kind of heat map, and that's dollar CAD. So you see up at the top, April there, the 2.5% almost average over the last 10 years. And you can see only 2 of the last 10 have been up years, or 2 of the last 12 have been gains in dollar CAD. And on top of that, today there's news out of the U.S. that NAFTA, Trump wants to announce something positive on NAFTA at a summit in Peru that starts next week, April 13th. And I mean, obviously,
is that where we got that additional acceleration to the downside after that announcement today?
Yeah, well, I mean, that to me was a good. I mean, it was reported again. It was actually reported about 12 hours ago, and then nobody really picked it up. And I guess Toronto rolled in, you know, an hour ago and started to sell the pair. And yeah, you saw it down about 50 pips extra on that. And that's where we're at, really at the lows of the day. So if you add it up for Canada, you have this seasonally positive news, and you're coming, you know, you're fighting off a bit of resistance at dollar CAD. It's 130, 131. I mean, you kind of broke it, but it's back down below. And NAFTA deal, if that comes to fruition, and it's a really nice setup, I think, for dollar CAD shorts. And you see seasonally, it's very strong for the Canadian dollar, weak for the U.S. dollar.
Okay, so that kind of makes sense. Some strength. Maybe the preferred trade is USDCAD short over Aussie long, but they're pretty much kind of the same trade, aren't they?
It is. It really is. I mean, there has been a bit of a divergence just in the last little bit because of NAFTA. So I think that Canada can come back and do a bit better than the Australian dollar on that as well. And I mean, really, kind of dollar trade, if you look at just the US dollar, April is the worst month for the dollar index, and it's particularly weak against the euro and sterling and the commodity currencies. So though I wouldn't really focus on the yen, and especially however, when we had Kuroda come out today and say that that he's thinking about an exit strategy for QE, so there could be some dollar yen weakness there as well. But it's a poor month for the dollar seasonally. You know, there's obviously going to be the trade headwinds and that story.
Okay, interesting there. What is your view? Do you really believe? In fact, I've been asking a lot of people this, and I know I could get some kind of answer from you. Is that, I don't know, about a week ago, Adam, I was reading that if the trade war was going to be very real and intensify, which is what's moving around stock indices lately, that we would be seeing more volatility in FX rather than suppressed volatility that we've had. With the moves in equities, it seems like volatility has compressed. Is there anything to that argument that the currency markets seem not to be worried about a trade war while the equity markets are?
I mean, it's been a bit of a puzzle, right? Because those worries are real and they are genuine. And to think, you know, the FX market is so much smarter than equities, that's a little bit of a stretch for me. I mean, you see bond yields even breaking down a bit below where they were a month ago. So I just think the market is confused about what to do in case of a trade war. I mean, who remembers like the last real trade war? I mean,
I was only 3. I barely remember.
Yeah, exactly. I mean, you almost got to go back before the Second World War, before you had, you know, this has been a lifetime trend of openness, globalization, open borders. And, you know, as long as we've had Bretton Woods, it's been kind of moving in that direction. So I just think the market's a bit confused. And I should mention the one last point I did want to make on dollar CAD before we moved away from that. You got a bit of a head and shoulders pattern here up to 131, and you can see it. And, you know, now we're sort of approaching the neckline. You announce the end of NAFTA, maybe back to 125 sort of thing. And I think that's probably going to be a pretty good trade this month.
Yeah, nice look on that. A lot of people focused on it. Makes me skeptical.
Yeah, it is. It's building, but it can't fight
the shampoo though.
Other ones, you know, there are some other seasonal patterns I'll touch on if you want. Natural gas is a very strong one, which also sort of plays into the commodity currencies. I don't know if a lot of people are trading natural gas out there, but it's one. Oil is in a bigger, longer term seasonal pattern. I mean, OPEC is on the push and pull right now, but I am worried about Iran and Trump leaving the Iran nuclear deal. And then the final one, I mean, it certainly didn't start out that way, but March is.
Why does John Bolton kind of cement that we're going to pull out of it? I mean, we know his views were more than just not being in a treaty. Bolton's views are even more radical than that.
What are we talking about, NAFTA?
I'm talking about, John, you said you're a little worried about Iran and pulling out the agreement.
Oh.
Does the appointment of John Bolton, who has a very militaristic views, even though he's probably going to walk them back, seal the deal that we're going to pull out of the Iran deal? And what implications would that have for crude oil?
Well, I mean, what we saw before, it takes about 500,000 barrels per day out of the market fairly quickly. And then you have the tensions that are going to come with it. I think Saudi Arabia's sense is really a once in a lifetime chance to vanquish Iran and is pushing that forward. Iran certainly doesn't mind. And I don't think Trump minds a little bit of Middle East instability because U.S. oil producers don't seem to mind. And that's great for the booming.
Yeah, that's a great point.
So I don't, you know, everything kind of lines up for more trouble for Iran. I mean, it'll make Trump a little bit hypocritical on the America First sort of stay out of foreign wars rhetoric, but like you said, Pompeo and Bolton in there now, they are certainly hawks.
Yeah.
And to come back to the seasonal. Oh, sorry.
Go ahead, buddy. Go ahead.
Stocks. It's a very good month for stocks. It didn't start out that way. Today there is a bit of a bounce. I mean, really, any index in the world, any major index you look at, April is excellent month. The best or the second best month of the year.
You know, it seems like foreign markets, like yesterday during the rout we had here, Europe was closed, and there was very little follow through overseas. In fact, some of the patterns in the outside the U.S. bourses look more constructive than the U.S. does right now. Have you noticed that?
Yeah, absolutely. I mean, you had some that are starting to look a little worse, like Germany, but they you know, valuations are better in a lot of these places. So, I mean, that to me shows more of a functioning market. I mean, Trump is doing this dance with Amazon as well, and tech's been a little bit crazy. So that's fine to take some of the froth out of there, but you know, Amazon's an American story. Tech is really an American story. Elsewhere, it does look a little bit better.
Can you ever remember a president having this much impact on volatility in the markets by just what he says? Or maybe we didn't have presidents that said much that created this type of moves in financial markets. I can't remember it.
It's nuts. I mean, you have an American president attacking an American company.
Yeah. Yeah. I'm talking about a president having that much impact on the market.
Yeah, it's overstated, but people are scared. And I don't think if we hadn't had a 10-year bull market, it wouldn't quite be the same story. But people are trying to find a reason to be scared, and that's fine. I mean, it's been very, very volatile. I mean, all I'm saying is the seasonals are great in April. That there are plenty of things to be worried about in terms of headwinds for the market. So, you know, that's kind of the take right now. And I think one to really like, you might like this take on trade negotiations and tariffs and everything else is America. The market has it wrong right now. America isn't trying to take on the world. America's trying to take on China, and they're using NAFTA. I think, well, Trump, from the steel and aluminum tariffs, we found out there were some leaks out of the EU negotiations, and one of the points they wanted from the EU was to back them up against China. And I think they also went to Mexico and Canada and said, hey, listen, we want a deal, fine, we're going to make an NAFTA deal, but we are going to some kind of trade war with China, and we want to know if you're on our side. So I think what looked like America against the world has turned into America kind of creating this coalition of the willing, coalition of the reluctant, to take on China. So China will suddenly see that it's everyone against them, led by the U.S. And that's why the deal is going to get done. And I think the Canadian, if we're talking about stock markets, the Canadian stock market, the Canadian dollar are going to move in sync higher. And I think you have a very good case for buying that. Something like EWC, then you get the currency exposure and the equity market exposure. It's a pretty good trade for April.
What an interesting idea. Yeah, and would you say that the majority of equities, or what would you say the percentage of natural resource stocks would be in EWC?
Financial services as well is probably an equal part of it. That's all Canada. Okay. Banking but you have like infrastructure things that are starting to look pretty attractive. Enbridge is a pipeline company. It's big in the US too, and a few others that are more energy services than direct energy. But again, I don't think oil looks that bad. I think oil looks okay here if Iran ramps up as well, and NAFTA gets done. And what the problem with Canada, and a lot of people don't know this, is that Canadian oil trades at a massive discount. I'll pull it up just what it is here at the moment. So it's trading just on pipeline gluts, really. It's at a $22 discount to WTI, and that's all. Why? Yeah, it's a glut. Canada only exports to the United States. All the oil from the Alberta only goes straight south. I mean, Canada has 3 oceans, but there are no pipelines running east, west, or north. And so you have Keystone XL that's coming online. You have other pipeline shutdowns because of leaks, environmental concerns, protests, and that oil hasn't been able to get to market. They're using a lot of rail to get it to the United States refineries, but those same refineries in the northern United States are being inundated with shale oil. So you're suddenly competing with that, and to pipe it all the way down to the Gulf of Mexico is very expensive, where there's more refining capacity. So there's a massive glut there, but it's loosening a little bit. Some pipelines may open up, and find a way to get that to market. And if you just close that gap, price of oil doesn't even need to go up to benefit the Canadian dollar.
Interesting. I'd like to wrap it up with, you've been around for a while, Adam, and you've seen flight to quality rallies at times when there's a little disarray in the markets. And what do you think of the fact that, you know, the bonds yield, 10-year yields have come down to 275, but really not getting the kind of flight to quality rallies that we're used to in our career? What do you think's behind that?
It's been tough. I mean, I'm not going to mince words. February, March was tricky. You'd be heading one direction, it would break down. Everybody was excited about 3% yields. It didn't happen on 10s. And the way it's filtered through to FX has been tough as well. You know, right now, I think you do have to go with the flow if you're trading intraday and look for headlines to get on board. And I think NAFTA is one of those, or central bank moves. Certainly the tide has turned, I think, in sterling, about some of the worries there. And if you can avoid anything to do with that stock market sentiment, because it turns harshly, and I think it really hasn't been that big of a deal for FX. Yes, there's some yen buying, and probably that will continue. So it's a tough one. That's really all I can say. But,
yeah, I mean, people aren't used to them both being bad at the same time. Maybe that's the era that we might be moving towards, is a bear market in both, because usually your flight to quality is in bonds, and to me it looks like just a correction in rates down here to 275. So
yeah, you're you know, unless you invert the yield curve. I mean, what's 2s 10s right now is 49 basis points. So
that's another problem.
Your floor on 10s is 2s, which are 226 and rising, right? Yeah. Because rates are still probably going to go up this year. But then the Fed says they don't want to invert the yield curve. So how much is the Fed going to hike after all? And then you kind of end up in this circular argument about, well, then I can't buy stocks.
Right.
And the FX market's just saying, I don't know either here. Let's just get in.
There's a lot of I don't knows out there, except for in Euro Kiwi today. That seems to know. Let me ask you one more. I know I said that was the last one. This will be, okay? Gold and silver, your views, and do you pay attention to the gold-silver ratio at all, or the fact that silver might be is so undervalued compared to gold that it might be the sleeper to probe into this time frame?
I think the problem for me is supply with silver. A lot came online, and a lot is idled in terms of mines. And so I don't believe in it. Another guy who really does believe in it is Ashraf Lady, who I work with as well. It's also his birthday today, so happy birthday to him.
Oh, wow.
We talk about this all the time, and he's a big believer. But I don't think that silver looks very good to me. I don't think gold looks great here either. It looks like it's topped out, and we're going to head back. And it's a bit of a range, and I think the market wants some kind of geopolitical signal. I don't think there's an inflation trade in gold anymore. I think it's all geopolitics and those sorts of worries. I mean, the temperature in North Korea, though, is coming down. That might be a head fake, because it always seems to be with North Korea. But in the Middle East, it might be rising, and I think you have a pretty compelling.
Maybe you know, the strong month going into May, April in equities that you talked about could be that the markets didn't think it was possible that Trump comes out of there with some type of deal that looks great, that may not hold years from now, but looks like he accomplished something that no other modern day president has been able to accomplish. And we get some type of peace deal.
On Iran.
No, with
or North Korea.
North Korea.
Yeah, North Korea, sure, yeah, like that'd be great. But again, okay, so you have, you might get a North Korea deal, but then you lose an Iran deal. And with NAFTA, you might get a deal, but then you're in a trade war with China. And
yeah,
so,
great points.
You kind of have this push and pull. Well, you're on these like shifting sort of ground here. And that's what I mean, you can just see it in the market, in almost any market, that sort of worry. But Europe is getting better. Some of these places on the periphery, emerging markets look okay.
Yeah.
So maybe.
So there are a lot of either ors there. What we're talking about today, Adam. But one that isn't is happy birthday to you. Happy birthday to you. Happy birthday to Adam and Ashraf. Happy birthday to you, my trading warrior brother. I hope it's a great
That's a very good Elvis sort of birthday.
Yeah, why not? And I hope it's a great year for you and Ashraf, and that pips rain down on you, and you guys have continued success in your own accounts and everyone who hears your voices and reads your material. Thank you so much for coming by, Adam, and have a great birthday.
Well, thanks so much. Here's a good health, and health is wealth for sure. Thanks, Dale. Thanks for having me on again.
You're welcome, brother. So that's Adam Button. Our Turnaround Tuesday is complete. Euro Kiwi crashing. We'll see everybody tomorrow. I have a crypto guy tomorrow. So we'll go on the dark side. We had Adam, who's the light side today, and we'll go crypto to the dark side.
Yeah, well, I didn't mention, I almost forgot to mention, it's positive month seasonally for Bitcoin. So I don't know what that's really worth, because you're pulling in some 2011 when Bitcoin was like 80 cents, had a great month in April.
Yeah, what a bargain up. Yeah. You could buy a used car or buy a Bitcoin. Yeah. All right.
Thanks. Yeah, that was such a nice song. Thank you.
Thank you, man. And remember, everyone, don't just count your pips, count your blessings. See everyone tomorrow. Have a good day hunting. And thanks again, Adam Button, my friend.